I think private equity definitely centers around a specific orbit of expertise. So some focus in the food sector, CPG, or e-commerce brands, and others focus on services. In our case, tech-enabled services and professional services, to be specific. So number one, the private equity firm that you would align with would need to have that type of focus, and they would want you to be inside of their addressable type of investment. And that's really important because, number one, it's their area of expertise so that they can actually be helpful. And they also understand the economics of the business, the operational aspects of the business, generally what the business needs to thrive and be successful. And that makes for a good partnership and makes for an opportunistic investment for them because they understand, here's where it is today and here's where it could be and here's what that means for us.
Welcome to Grow Think Tank. This is the one and only place where you will get insight from the founders and the CEOs of the fastest growing privately held companies. I am the host. My name is Gene Hammett. I help leaders and their teams navigate the defining moments of their growth. Are you ready to grow?
Today, we're going to talk about what are PE firms looking for when they go to look at a strategic partner. One of the specific things that we hear over and over and over is they want a strong management team. Well, what does that really mean? Well, we unpack that today with our special guest. It's Eitan Reshef. He's the CEO of Blue Media, or Blue Will Media, if you will. Blue Will is an e-commerce company that does from click to ship everything that you need to drive business and really improve the operations of your e-commerce company. Now, that being said, they're in professional services. They are a traditional agency, but they do some unique different things. And today we look at a conversation after they've gone through a PE event, looking back at it. What are some of the things he figured out around this? And what are PE firms looking for? Well, we talk about strong management teams. We talk about some of the other things too, as well as valuations of companies to give you insight around this. I think you'll find it very interesting if you're considering to sell your company in the next 5 to 10 years, say. If you're doing it in the near term, then you probably need to get to work. And if you have any conversations or questions whatsoever about that, I'd love to chat with you. My name is Gene Hammett. I'm an executive coach. We do not only executive coaching, but we do leadership development where we turn managers into leaders. If your company's growing and you want to make sure that you keep up to pace and that your people, your strong high performers are supported through being better leaders, then we actually do that turnkey for you. If you're curious about how we do it, then make sure you come to our next executive conversation, which is a virtual conversation we have with other executives of fast growth companies. Many of the guests have been on the show before, many of them are clients. And if you feel like you'd like to join that conversation, it's absolutely free. Go to coreelevation.com/virtual conversations. You can find out when the next one is. You can find out if it's a good fit for you. My request is go ahead and sign up. You'll always get the recording of that, but and any worksheets that we do with it, but you will also be notified when we have another one and if that works for your schedule and the topic really aligns with something you're struggling with, then you definitely want to join us for those virtual conversations. Just go to coreelevation.com/virtual conversations. Now here's the interview with Eitan. Eitan, how are you?
I'm doing well. How are you?
I am fantastic. We're going to have a great interview today. Before we dive in, I've already let our audience know about you personally, but tell us about Blue Media.
Yeah, so Blue Wheel has been around since 2011, and we are a digital e-commerce agency that powers our brand's experiences from click to ship. What that means is that we can support brand growth online on both the front end of marketing, think demand generation, your advertising, your social media, your email, etc. But we also understand that there's a direct relationship with the back end operations of e-commerce. That's your inventory planning, your warehousing, your 3PL, etc. So we've built an agency that can really span across that entire spectrum.
Fantastic. Why e-commerce? Is that just an area that you found interesting or some other reason why you found this niche?
Yeah, so I think like many agencies, when you start, you're really just trying to get as many clients as you can to do whatever services you feel like you can offer to them, and so you're not so picky. But what we did recognize early on in the agency history was that we had a special skill in e-commerce. We had people who were passionate about e-commerce and ultimately were able to drive success early on in that specific industry. So we decided at one point, probably about 8 years ago, that e-commerce was going to be our exclusive focus.
Well, it's about the right timing when one of my other clients actually found the e-commerce focus. You may not be familiar with this, but Gray Umbrella was actually bought, it kind of merged together with, I know I should know the names of these. How do I not know the names of these? It'll come to me in just a second. But I've been in this space where companies have sold before. I know you've recently been through sort of a private equity event. How would you frame that event for us as an audience?
Yeah, I mean, would you like me to start from the beginning?
Yeah,
Kind of.
and it just hit me. That other company was Visiture. So
okay, yeah, I've heard of them.
With Visiture.
Yeah, so I can start, several years back on how we arrived here. As many can understand, especially with the pandemic being sort of an accelerator for e-commerce activity, driving record year-over-year growth in the sector. We saw a unique opportunity where there was really a shining light on our specific industry and our specific set of services that we offer to brands. They were incredibly high in demand. We grew the business, almost 100% one year and grew it, average 40% year over year after that. And we recognized that this was a unique moment in time where, again, there was a spotlight. And at the same time, we realized that in order for us to continue to evolve and to grow to the agency that we wanted to be, we wanted a strategic partnership. And that came in two ways. One, we wanted to align with another like-minded business that we actually knew for quite some time that could help us unify the front end side of marketing, which was our historic focus, and the back end side of marketing, which was their historic side of focus. And we also knew that we needed to bring a private equity sponsor to help, essentially fund the operation, build the businesses together, and be our partner for future events in terms of acquisitions and bolt-ons as well, because we felt like that would be the first stop, not the last.
And the reason for going after this was, I guess you couldn't fund it yourself, so you had to go out there and get funding, or was it another thing that was driving this forward for funding?
Not necessarily. I mean, the business was in really good shape. Actually, I think in even better shape than I thought it was when I was at the helm, kind of, running it and not having a private equity sponsor or partner. I was very much a cash hoarder, very much rainy day fund that was way outside of what was normal or reasonable. And I think that this was really much bigger than that. We knew that really funding acquisitions was not something that we could necessarily do at the scale that we wanted to without having a strategic partner. In addition, I recognized there were things that I did not know in my position and in my seat, things that I did not know about running an organization that was trying to grow from where we were at and call it 90 people to get to 900 people. And I was looking for that strategic partner who's, sort of been there and done that before, and could really be a great resource for helping me understand the various aspects of the business that I might not know.
Now, Eitan just said there's lots of things I don't know. And it really is something I wanted to bring this up because I don't think leaders have to know everything. I think a lot of people feel like that's what leadership is. You have all the answers. Well, maybe having all the answers is actually slowing your company down. You want to make sure that you have strong people around you, that they are empowered to make decisions, because if you have to make all the decisions, then you will be surrounded by people who won't make the decisions for you or with you. And so you want to make sure that you are being the right leader for this. And the things that you don't know, I mean, there's always things that we don't know, but it's actually an advantage in leadership if you really know what I mean by that. Not everyone sees it the same way, but I just thought I'd share that with you because everyone is growing and evolving as a leader. It's not about having all the answers. It's about being able to lead people to find those answers and lead them through the challenges. You don't have to do it for them. You can be the leader and they can execute on this. That is how you build a team around you. Back to Eitan. Well, let's dive into this, Eitan. I'm very curious. What are private equity looking for in a partner? Obviously, they want, good financials and things that are solid and growing and whatnot. But I'm talking about in terms of leadership and culture and people. What would you say in your conversations with various PE firms they're looking for?
Yeah, I think that that's sort of a multifaceted answer, but let me start with the business itself. I think private equity definitely centers around a specific orbit of expertise. So some focus in, the food sector, CPG, or e-commerce brands, and others focus on services. In our case, tech-enabled services and professional services, to be specific. So number one, the private equity firm that you would align with would need to have that type of focus, and they would want you to be inside of their addressable type of investment. And that's really important because, number one, it's their area of expertise so that they can actually be helpful. And they also understand the economics of the business, the operational aspects of the business, generally what the business needs to thrive and be successful. And that makes for a good partnership and makes for an opportunistic investment for them because they understand, here's where it is today and here's where it could be and here's what that means for us. Now, beyond that, just to answer your question about leadership and people, they want a leadership group that's intact. They want to make sure that the business can continue to run in the way that it needs to and continue to innovate and not lose a step by taking on a partnership like this. So they want leaders who are committed to the long-term vision.
Let's take those separately. A leadership team that's intact, what exactly do we see? Like, did they comment on what you guys have or what you didn't have that you could share with us today?
Yeah. So one thing that we did not have at the time was a dedicated CFO. So we had, worked with fractional officers, had a internal finance team, and to the extent of which we needed that level of support, we had it at the time. But in order to kind of get into the world of private equity, where you're really trying to accelerate the growth tremendously on a company, not to mention you now will have new reporting requirements, potentially do an audit for the first time, you have to have a CFO intact. So that was one of the first steps that we took, and we were completely bought in on that. And to be honest, it was a lifeline for myself and the president of the company we ended up merging with, because it certainly took a lot of weight off our shoulders and brought in sophisticated, qualified support that was way, way better at doing the financial and administrative tasks that we were doing ourselves. So a big lift, and definitely something that was a part of that private equity conversation in the beginning.
And another piece behind that was they want to make sure that the top leaders of the company are there for the long term. I know how some companies have solved this. Did you guys have to solve it, or did you already have a solution to make sure that these people are committed to being there for the next 2 or 3 years?
Yeah, I mean, I think we kind of solved it well before this even happened. Our top officers at Blue Wheel, prior to the merger, we have someone who's been there since founding, essentially. He was, I think, employee number 1 or number 2. So call that almost 13 years. Our COO is going on a decade. On the retail Bloom side, which is the company we merged with, there were people who had been there for many, many years. So I think that already existed. And I think we all agreed, and we had really good conversations ahead of doing something like this that felt like we had consensus and ultimately really strong buy-in on that this was the thing that we wanted to do, and that we were all committed to doing it and seeing it through.
So we've been talking about this, and there's something that comes up quite often in my coaching conversations with people that are looking for outside investment. And it comes to about the valuation of companies. And I'm not trying to get any, secrets from you, but what can you share with us about valuations that you learned through this process?
Yeah, so can't share any specific details regarding my company, but I can give you some insight into just what you can find readily available around the net, but also maybe I could shortcut it given what I've learned. So like I said before, private equity firms are focused on specific areas of expertise. So even in the realm of, call it, professional services, there are private equity firms that look at the lower end of the market, which, call it, those businesses are maybe $1 million, $2 million in EBITDA, something around that category. And that's their area of expertise. Then we talk about lower middle market or middle market, where businesses are typically doing that, $5 to $15 million in EBITDA. And then you have the upper end or middle to upper, which is 15 to 25 to 30, and then even higher than that, 30 to 50 to even 100 and beyond. So first, you have to understand where you're at, as a business, and you have to be realistic with yourselves, because it can be pretty scientific inside of each category, which tier you're in, what your value will be. And then you'll trade on a valuation multiple on that EBITDA that is pretty much in market in that specific category. Now, there will, of course, be outlying scenarios. You have a very high in demand service or product, and you have a strategic buyer or a private equity firm that places an additional value on that. And that can be, call it a couple extra turns here in multiple, but realistically, it kind of all is cyclical, and they ultimately kind of settle in around the same multiples in those different categories.
So one thing that I've shared with people before, and you can correct me if I'm wrong, but PE firms, when they are looking to assess the leadership structure of a team, the more it runs by itself. So the CEO is not a force of nature inside the operations and sales and whatnot, that the valuation is going to be a little bit higher. Is that something you can confirm inside the process you went through?
You mean when the responsibilities are more kind of evenly distributed, and it's not a CEO who kind of has his tentacles in every aspect of the business?
Right. The CEO has his tentacles in everything. It's going to get a lower valuation.
So I think in theory that makes a lot of sense. I can't speak to how our private equity firm made their assessment based on our particular situation. What I can say is that we had a really good outcome, and I don't have my tentacles in every single aspect of the business. I like to say this a lot, but there are people in our company, many of which know a lot more about what we do than even I do. And I like to rest on their expertise and rely on them to make good decisions. And I don't think I could ever be that type of person who has their tentacles in every single aspect of the business. So in our particular situation, that was definitely not true.
Now, we've been talking about valuations, and some of the things will put you at the top tier of those different bands. So if we go back to what Eitan was saying is, each revenue will have a band of profitable aspects to it. And that revenue puts you into a band of a valuation multiple. And as you go from 1 to 5, you might be in one band. If you go from 5 to 10, you might reach a new band. It's going to be a higher multiple. And above 10 might be an even higher multiple, and so on and so forth, because you want to make sure you know where you are. But you also want to make sure you know how to maximize within your own category. And one of the things that you want to make sure that you're doing as a company is continuing to grow. Now, this means your sales have had a steady growth rate, and that growth rate tells a story about your ability to execute over time. And you want to make sure your business also has a business model that has that recurring revenue element that people are looking for. Not required, but it does help when you have that recurring revenue and the relationships with customers continue for year after year after year. That's something you definitely want to document. You definitely want profit margins to be growing. You want revenue to be growing. You also want SOPs. When your business runs without you, a self-managing company, if you will, then your business is more valuable. And so if your business truly does run without you, you'll be at the top tier of the valuations. And if it really runs without you, then you'll have less time to work out or earn out your extras. You'll be able to maybe move on in a year, or maybe it's 2 years. But some people are having to work 5 years because they have to create all of these operational things and have to develop people around the strong management team that they don't have. This whole episode is about what you need to do to prepare for a PE firm, but also how to maximize the valuation. Back to Eitan. What did you learn about valuations that is different than going through the process? Like, looking back at it, something that you carried into the process that you realized wasn't true?
So I think something that's really important to note is, like I said before, private equity firms are incredibly sophisticated. They know what they like to buy, and they know what they like to ultimately place in terms of valuation. So I think that there's obviously a lot of negotiating that can happen in that process, but they generally have a mark, and business owners should be pretty aware of what that range looks like. Now, I think more importantly is once you understand what that range should be, the more important evaluation as someone looking to sell is to really find the right partner. Because I think all things equal, you could source a lot of offers. And I spoke to 55 different firms. We took this process very seriously. I spoke to everyone. I took every call. And ultimately, what I found out was that, valuation aside, there was always going to be some consistency there. Some people a little bit less, some people a little bit more. What is more important is the quality of life that happens after the transaction and what partners you have and what you signed up for, because that is critical to having a good experience, like personally and professionally.
I don't want to leave us hanging here, but I know we're running out of time. Quality of life. This has to relate to a lot of offers coming in, require you to work a year, 3 years, 5 years. What can you share with us about quality of life that you wanted to get up front, like set expectations with your strategic partner?
Yeah, very easy to answer. So first and foremost, there are two different types of, transactions or acquisitions or whatever you want to call it that we were looking at, or two different types that were available to us: a strategic, which is another company buying us and integrating us in, or working with the private equity sponsor who was willing to acknowledge us or see us as a platform. And the latter is what I was pretty hell-bent on doing. And that was a prerequisite for any deal. We wanted to be the platform. We believed in what we were doing, and we wanted to be long-term on Blue Wheel as, the centerpiece of this experience. We were not ready to sort of blend in. We wanted to be in control, in pole position. So that was a prerequisite to making the decision. And in terms of the experience, I don't want to speak to an experience I didn't have, because we didn't do a deal with a strategic, but I can tell you that as the platform, there's a lot of work that you have to do to be the platform. This isn't just go on vacation for 6 months and check out. This is check in in a deeply meaningful way and learn a whole host of new skill sets in order to operate a business at this level. And that's what I wanted. I wanted that for my own personal development. That's part of my path. And I'm really appreciative of Longshore, our private equity partner, who saw that in us, shared that vision, and is allowing us and supporting us in this pursuit.
Fantastic. We're wrapping up today's conversation. We're looking at how to really think about your company as you go through a PE event. Anything you feel like we've left out of that series of questions or answers that you think would help our audience today?
Yes, just a follow on. So I had mentioned that we did a pretty intensive search and spoke to everyone. But I want to emphasize something really important: picking the right partner. You have to share good values. You have to share the core values, I guess is a better way of putting it. You need to really respect and understand who's going to be your partner at the end of this thing, because you can get wrapped up and swept up in the process of, working through a transaction, and it's a lot of work and diligence. And then, by the end of it, you don't even know which way is up. But when you're courting potential suitors, you really need to make sure you trust the people on the end of the other end. And I feel like we made a phenomenal choice in that regard because we were so focused on finding that right fit. The valuation stuff will work out, but you can't solve for cultural fit after the fact.
Well, you said it here. I learned this through other interviews that have been on this podcast before. We were talking about core values. And I remember someone asked, I was like, where else can you use core values? He goes, well, in acquisitions. And we went through one of the first acquisitions they did was a nightmare because those values did not align. And he goes, since then, we've had 3 acquisitions, but we made sure that we are working with companies that really closely align values-wise to our current culture. So
could not agree more.
I appreciate you sharing this wisdom with us today. And thanks for being here.
Thank you. Talk soon.
Wow, another great interview. I love talking to someone about the process of selling their company, and not that he's done with this because they're still running it, but they took on a new strategic partner that I think is very interesting. Some of the things he shared and some of the things that you need to address as you get there. Now, as we cut the recorder off, he continued to share with me things that I didn't even know about selling to private equity, and it really is something you want to make sure that you reach out to people and learn as much as possible, because that will help you get your grounding around what it is. But also the strong management team, what that really means is you want to make sure that you have a self-managing company. Really is an important piece to the valuation of your business, and it is something you can control, and it's a lot more fun to run a business that manages on its own, because you can go on vacations whenever you want to, and it continues to grow. That's what they're looking to buy, they being the PE firms. When you think of growth and you think of leadership, think of Growth Think Tank. As always, we encourage. We'll see you next time.